Oh, yeah. Oh, yeah. Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. Quick disclaimer, I am suffering from bronchitis, so give me a little bit while I catch my breath, etc. through this, and we obviously have to talk about the elephant in the room first off and foremost. There we go, something like that. This isn't a Fetterman. Maybe it is a little bit. So, obviously, I had said that we would have the last show on this channel as of 2 weeks ago. I took the week off. I had some fun doing some videos that I wanted to do. I hope you guys enjoyed some of them. I definitely need to work on my camera setup and lighting, etc. So I apologize for that. That's stuff that I'm getting used to with the dedicated content that I haven't been doing for a while. So I have two more really big videos that I want to get out. One is basically intentionally starting a fire in a mining rig, and another one is the ARC 750 review, which we have right here. Boom. And so that's some of the stuff that I'm working on. But I was under the impression that the live show was killing the channel, and obviously I'm trying to survive as a content creator primarily because cryptocurrency mining is clearly not profitable now. And I have been cash flow negative since about, basically the merge. So September 15th, we're getting on into November. Part of the problem here is that we have 0 sponsors left on the show that are paying any cash. So I don't have cash flow from that, unfortunately. And in addition to that, you know, we had essentially the worst month ever on YouTube, but some news is coming out that makes it very clear that that's not all about me. So we'll talk about that now, because this is going to be relevant to not only, of course, my channel, but also to you as well as a viewer of YouTube in general, as well as just in general cryptocurrency too. So Google misses, and we'll pull this up, on expectations as YouTube ad revenue comes up short. Google parent Alphabet reported its third quarter earnings on Tuesday, falling short of analysts' expectations on the top and bottom line, as YouTube advertising revenue came up 400 million short of estimates. These are the most important numbers from the report compared to what Wall Street was expecting of the company as compiled by Bloomberg. Revenue ex-TAC 57.27 billion versus 58.2 billion expected. Earnings per share $1.06 versus $1.25 expected. Shares of Alphabet were down nearly 6% following the announcement. The digital advertising market has been struck by a slowdown in spending in the past few quarters as companies pull back their budgets amid rising inflations and interest rates. Social media companies have been especially hammered by the cuts, with Snap reporting a net loss of $360 million in revenue growth and revenue growth of just 6%, its lowest yet. Meta's Facebook has run into similar headwinds, with the company reporting its first year-over-year decline in revenue in Q2. That company is set to report its Q3 earnings on October 26th. But Snap and Meta are also dealing with the aftershocks of Apple's iOS privacy changes, which limit their ability to collect user data across the web that they use to sell advertisements. Alphabet, however, is still able to collect plenty of user data via its search app and YouTube, providing advertisers with safe haven from Apple's privacy changes. Alphabet still isn't immune from the impact of economic slowdown. According to Bloomberg, the search giant has cut projects at its Area 120 incubator and required workers in the group to reapply for jobs elsewhere in the company. And according to CNBC, CEO Sundar Pichai, you know I'll always botch names, was forced to address questions from employees who accused the firm of cutting costs when Alphabet was experiencing record profits. Now, this is coming from Yahoo Finance, right? Let me get a sip. Gotta keep the caffeine pumping. And you can kind of hear it. My voice is still kind of going, but we're going to get through this today. This is directly impacting every YouTuber. In fact, I saw posts from Boogie2988, who historically has made quite a bit of money off of YouTube every year up until this past year. He's having a lot of trouble. I'm seeing it across the board with a ton of different YouTubers and content creators. A viewer of mine had brought this up quite a while ago, which is one of the reasons why we started Locals, which is at sonofatech.locals.com, to help support my channel so that I could continue doing what I love, which is talking to you guys every day about cryptocurrency, okay? And the fact of the matter is that we are going to experience economic slowdown to the point to where the ad revenue is going to get cut pretty significantly. And a big portion of that cut is getting compounded by the drop in cryptocurrency interest, as well as the failures of a lot of crypto companies that grew way too fast and that fell off. Crypto.com being an example of this, along with a ton of different companies. And the thing is this is directly contributing to YouTube's and Google's soft quarter. The company's ad growth in the third quarter was its slowest in 9 years. Coming from CoinDesk, it says crypto ad spending slowdown contributes to Google's soft quarter. Google reported its softest advertising growth in 9 years late Tuesday, with company management taking note of softer crypto ad spending as contributing to the weak numbers. We did see a pullback in spending by some advertisers in certain areas in search. So Chief Business Officer Philip Schindler said on a call with analysts after the company reported earnings. We saw a pullback in the insurance, loan, mortgage, and crypto subcategories. Overall ad growth of 6% in the third quarter was the softest since 2013, CNBC reported, with YouTube ad revenue slipping to $7.1 billion from $7.2 billion from the third quarter a year ago. While travel and retail were again the largest contributors to growth, Google did see a pullback in spend in the financial services vertical from insurance, loan, mortgage, and crypto advertisers. And that's from analyst Maria Rips of Canaccord Genuity. So, network and YouTube also faced difficult comps and FX headwinds, with management adding that pullback in spend from the brands due to broader macroeconomic uncertainty that started in Q2, increasing during Q3, she added. Shares of Alphabet, Google's parent company, were down 7.5% Wednesday morning. Now, I'm going to show you guys exactly how this looks from the perspective of a crypto content creator. I'm going to show you guys what my traffic looks like. Now, the other channels are going to have their own thing, right? Other channels are still performing better than me for other reasons as well. we can get into all that and stuff, but for sake of transparency, I'm just going to show you guys what I'm at, where I'm at right now, why I'm struggling, so you guys are aware. And then we're going to, I'm going to talk about a little bit about what I'm going to do here in the near future and kind of some of the things that may change coming up. But the big thing here is to understand that we are across the board experiencing these issues. And if we're talking about the best way to basically for me to make a living without having to rely on the community as much, that all came through ad revenue. It meant that I could make content, you watch the content, the ad plays, and then the advertiser pays me. And this is primarily what I lived off of. The cryptocurrency side of things, I tried not to live off of for the most part. And that did bite me in the butt too, because I held on to way too much of it and then it dwindled away. I think like some of y'all have experienced as well. So that's kind of the deal. I've made some poor decisions. We'll do better in the future. I'm going to show you my board now and you guys will see it and you'll see the dip. I can show this to you guys. But this does fluctuate. I just want to give you guys an idea of what's happened here recently. I have gone from an average of 623,000 to 782,000 views in 30 days to now under 300,000 views. Now, part of that, of course, is just some of the shifts and changes we've made over the past couple of weeks and realizing that we made a mistake there, obviously, right? Our watch time is down 31,000. Obviously, live shows are a big part of that. Our subscribers are down. We've lost 266 subscribers. This is a problem we've been dealing with for a while. We had a real nice uptick in September, and then it kind of got smushed down again, losing a lot of subs just day to day. And our estimated revenue is down from basically $4,000 a month to $2,000 a month. Now, I clearly can't survive on that. So obviously, what we're leaning on is essentially the locals, but the locals right now, we haven't really hit the number we need to make up for everything. If it was just YouTube, then I'd be okay. But unfortunately, we lost the crypto.com sponsorship. So I don't have the revenue that I had, and the mining revenue's gone, and I put myself in a bad position with rental. So I'll be talking about, I'm looking at ways to get out of that. I'm looking for, advertisers, that sort of thing. And there's just some work on my end I have to do. Unfortunately, I keep getting sick too, which is not helping things. And this is where I'm at. I just want you guys to know where I'm at so you're aware. So this is as transparent as I can be, and why, if your income our income dropped by $6,000 in less than 30 days. So my income dropped, once again, $6,000 in less than 30 days. And obviously that's going to, from my perspective, make it very hard mentally. I've been dealing with mental toughness and that's that sort of thing over the past, couple months. As it pertains to this. And it makes it really, really hard to continue to do content to the level and the quality I want to do it when I'm worried about, how we're going to pay rent, buy groceries, do all that sort of stuff. Okay. That's not an excuse. Well, it is. Yeah, it's an excuse. And I'm trying to, at this point, get over the excuses. But it's really hard. To compound on that, I don't know if you guys have noticed this, but basically we're losing stuff right and left from the revenue generation side of things as well. And that is for cryptocurrency in particular, because we are starting to experience essentially more regulation in the space. Latest is from Brave. I got this email yesterday. Dear Brave creator, recently there were some changes to what it means to be a verified creator. One of these changes is that you need to have a custodial account, such as an Uphold, Gemini, or Bitflyer account. I have an Uphold connected to your Brave creators account. from a supported region to count as verified. Although you've already connected a custodial account to your Brave Creators account, it looks like you're in an unsupported region for your selected custodian. As a result, your channels won't appear as verified for the time being. However, the moment your country does come supported, your channels will automatically appear verified again. So due to regulation, I have also now lost my revenue from Brave Creators as well. So it's snowballed into, welcome to the bear market, right? That's where we're at. We got to be getting close. Now, obviously, maybe not. Maybe it has to go like completely negative, but it's definitely looking like we're close. If I look at all the stuff that's happening right now, I'd say we're getting pretty dang close to the bottom. There's some positives coming up here in the future, but this is why I've been struggling with what I'm going to do, content creator wise, what we're going to do as far as moving forward. Here's the commitment so far. Okay. For the next few weeks, and I'll be trying to work through this. I will be streaming every day from essentially 9:45 a.m. to 2:45 p.m. with the first hour being on YouTube, Tuesday through Friday. The first hour being on Rumble exclusively on Monday. And then after that, we'll be streaming over on twitch.tv, where we'll be covering more like one-on-one conversations and that sort of thing. So if you're interested in that, stay tuned for that. And we'll be doing that essentially for the last few hours. Tomorrow night on Twitch, we will be doing a Call of Duty Modern Warfare 2 release party for the community. If you're interested in that, make sure you're following over at twitch.tv/blindrun. And I hope to join you guys in some Modern Warfare 2, which, not going to brag, I used to be pretty dang good at some Call of Duty. So let's get some custom matches going and see if you guys can outslay me, because that'll be fun. Now I'm going to play an ad, and I would like you guys to check the ad out. And this is basically how I'm paying for my octo miners. So in full transparency, once again, that's where we're at. All right. So I'm going to go ahead and play this ad. And then once we are done with that, we are going to move into the actual fun part of the show.
Established in 2017, Octominer is an international mining hardware company. They manufacture and engineer the best mining equipment in the industry and supply rigs to some of the largest mining farms around the world. Their GPU mining rigs also integrate with the top crypto operating systems like HiveOS, MinerStat, and Simple Mining. All parts come with an international 1-year warranty. Exciting news! They will be adding ASIC miners for sale to their website soon and launching a new product built specifically for ASIC home miners. Please visit octominer.com or email support@octominer.com for questions.
And welcome back, ladies and gentlemen, boys and girls. So let's get into hardware news. If you guys are not familiar, the 16-pin connector on the RTX 4090 is burning up. Well, obviously, if you're going to try to push 400 to 600 watts of power through tiny little cables, that's going to happen. Whatever is going on with the engineers at NVIDIA, it's been absolutely atrocious since the 3000 series. Putting memory modules on the back of the RTX 3090 to where they couldn't be cooled, to now burning people's apartments down and their computers down because they don't even understand gauge wiring versus the amount of power going through that cable. It is absolutely insane. I have no idea how this is acceptable by any means at all. Like, nobody caught this? Nobody? What the heck? NVIDIA's 16-pin connector on the RTX 40 graphics cards burns up, melts the cable and the plug. The first case of the 16-pin connector powering the RTX 4090 burning up and melting the plug has been reported over at Reddit. We now have a third case of the RTX 4090. Once again, the Tough Gaming from Asus going up in flames. Fortunately, for the user, only the cable is melted, and he reports that the GPU might still be working fine, and they hope that's the case. In most cases, the GPU is not going to be fine. I'm just going to tell you right now. these cables in this connector, they're way too close together, which means once it starts burning and melting and the wires connect, poof goes your GPU. Okay. It's not, there's very, very little likelihood that it will be functioning at full performance at this point. So another graphics card at this time, the Asus Tough Gaming. Apparently all Asus Tough Gamings right now, by the way, clearly because they're trying to pull some power. You can see that nasty burned up crap right there. It looks like it's primarily the Asus from the reports, right? So it does say there was a Gigabyte as well right here. So Gigabyte as well. Here's the connection, the connector right there, melted. And there is the plug. Oh, and we can't forget the issues that NVIDIA had with New World and the card actually blowing up on the RTX 3090. You know, at this point, it's just silly that we have this many issues coming from NVIDIA. And when we look at board partners dropping them like EVGA, it's really no wonder. Like EVGA took such a big hit off of the poor design of the 3090 with specifically New World and it blowing up, that I think like if they had gone into this with such low margins that they have or had with NVIDIA, and then this was the problem that they ran into due to the specifications NVIDIA was sending out being poor, like EVGA would be absolutely decimated right now, especially in today's economy. So it was probably one of the best decisions they've made because board partners are already getting screwed by NVIDIA. And then NVIDIA is sending out bad specifications like memory modules on the back of their GPUs and these 12pH crap. Here's the deal. I think AMD is going to come out with the 7900 here in just a little bit, the 7900 XTX, which is even faster, like they're having an even higher end 7900 here, as rumored by video cards. They are going to perform just as well, if not better. They're going to be running off of PCIe, like the old gen. They're going to be utilizing less power. And I think that we are going to see basically AMD take the lead, Radeon take the lead here. And that's what I'm looking forward to. According to BenchLife, the upcoming flagship RDNA 3 parts should be called the 7900 XTX. We can now corroborate this name is indeed used by AMD for the new Radeon model. The XTX branding has not been used since the X1000 series. However, it is still part of the GPU naming schema. There were rumors that the upgraded 6900 XT models may end up with the XTX moniker, but eventually a decision was made for obviously the 6950 XT. As of now, we are only aware of two 7900 models, the XTX and the XT. There's no trace of the 7800 or the 7700 series. Now, here's a problem that I see, and this is the problem that AMD is having in general. And we saw this on the CPU side here just recently. They released the 7950X, a fantastic CPU that is not backwards compatible because of the conversion from PGA to LGA, right? And required a new motherboard upgrade as well as a memory upgrade. And that drove the price of an upgrade to, you know, on average with the motherboard price, average motherboard price, okay, of $500. That was the average motherboard price. It drove that price up for an upgrade at the very bottom level to an average of like $1,000 after memory, a Ryzen 5, 7600 and a $500 motherboard. Now you could knock that down to the 300, 600 and then 250, I guess 850 a bare minimum, right? If you got like the cheap $300 motherboard with the 7600 and DDR5, like 32 gigabytes at, low speeds, hopefully with XPO, obviously. And then Intel just comes out and bing, bang, boom, like they launched the backwards compatible 13900K, which is beating it out. And they have good low end and they have backwards compatibility. So they have compatibility with boards that are under $200 and support for DDR4. And the thing is Intel doesn't need the memory performance that Ryzen does. So you also get pretty much the same performance between DDR4 and DDR5. You know, there is some performance difference, but not near what you would see on the AMD side. Now, that gets really interesting, obviously, now that we look over at the GPU side, because we're like one series behind. NVIDIA is messing up so bad over the past 2 generations, and AMD played so much catch up with their architecture that they are in the position to basically take over the GPU market. However, due to the current kind of macroeconomic issues that we're having and shortages along with, you know, recession, etc., I think it would have been better served to see them come out with like a 7700X first, almost like they did with the 5000 series. Because I think that getting the price point down lower with a good boost in, of course, performance is where I would like to see them at personally. That's okay though. We are still getting some pretty badass memory, right? We're getting GDDR6 at the new speeds, the 20 gigabits per second, and we're getting a 384-bit bus on supposedly the XTX. Now the XT is apparently cut down to 320-bit bus now, but it does, you know, use approximately 90 watts less, which could be really interesting from a memory intensive algorithm perspective for GPU mining. Obviously, we'll have to see where this goes. And, you know, we already kind of know the 4090 as far as GPU intensive. We were looking at essentially the same performance as the 3090 Ti, whereas, you know, on the upper end of, or on the core side of things, we saw almost double the performance on things like Radiant, Caspa, and so on. And then, you know, some better trickling down. But on the AMD side, we're going to see a significant improvements year over year, or sorry, run over run, right? Model over model. From the 6000 series to the 7000 series, we're going to see a significant improvement in the mining performance on memory intensive, as well as the mining performance on the core intensive. And the reason for that is because we are seeing a move up from a 256-bit bus to a 320 and 384-bit buses, meaning you're basically seeing what will be the largest bus available for GDDR6 memory, period, right? Because on the NVIDIA side, the RTX 3070, which everybody loves, with the GDDR6, is running a 256-bit bus. So this will be probably the coolest running, most reliable mining GPU to date, in my humble opinion. Because we are getting that 384-bit bus with GDDR6, which is basically, like we've seen in the past, more reliable than GDDR6X from a temperature perspective. And I think it's going to be awesome. We're also getting 20 gigabits per second on GDDR6. So I'm looking forward to it. Now, Bitcoin miner Core Scientific shares plummet after the bankruptcy warning. I thought Cores was doing good, guys. I did. I was wrong. That's why we don't offer financial advice. I'm in financial ruin, as we talked about in the beginning. We're struggling. A lot of us are struggling. You know, to be fair, the entire U.S. economy is in financial ruin. So we'll give Cores and everybody a break here. We'll try to start approaching everybody as much as possible with as much empathy as possible as we get through this together, including, yes, BitBoy Crypto. Okay. Look, I'll say this. BitBoy Crypto has been impressing me quite a bit lately, by the way. In addition to that, he's looking quite slim and quite in shape. So congratulations. I wanted to mention that and give him a shout out. So the world's largest Bitcoin miner said it will not make payments that are due in the next few days as it reverses dwindle. Well, reserves dwindle. Let me get that correct. The world's largest Bitcoin miner, Core Scientific, warned that it may have to explore bankruptcy if it fails to improve its financial condition, sending shares spiraling 70% in pre-market trading. Oof. You know, if you're going to explore bankruptcy, I don't know, mention it at the last minute. Dear Lord. The miner said it anticipates existing cash resources will be depleted by the end of the year, possibly sooner. I'm with you, man. Unless we get up to our 500 goal on civetech.locals.com, we're in the same position, my good sir. Substantial doubt exists about the company's ability to continue as a going concern for a reasonable period of time, it said in the filing on Thursday. The miner is exploring a number of strategic alternatives for raising additional capital. It has higher engaged whale, Gostel, and manages elbow. What? Ugh. It has higher engaged. Anyways, this LLP has legal advisors and PJT Partners LP as financial advisors. Should the capital raise alternatives fail, the firm may have to file for bankruptcy protection, Core Scientific said. The Austin, Texas-based company will not make payments due in late October and early November 2022 with respect to several of its equipment and other financings, it said in the filing. Creditors may decide to sue the company for non-payment or take action with respect to collateral, it said. With the substantial decline in mining rig prices in 2022, we believe there's a significant chance the creditors holding this debt decide to restructure instead of taking possession of the collateral, Compass Point said in a note. Still, without knowing how discussions are going with Core's creditors, we think a scenario where Core's has to file Chapter 11 protection has to be taken seriously, especially if Bitcoin prices decline further from current levels. With the substantial decline in mining rig prices in 2022, we believe there's still a significant chance the creditors holding this debt decide to restructure instead of taking possession of the collateral, Compass Point said in a note. Still, without knowing how discussions are going with Core's creditors, we think a scenario where Core's has to file for Chapter 11 protection has to be taken seriously, especially if BTC prices decline further from current levels. Obviously, they had a nice little pump here that's helping them out. Core's scientific woes reflect the depressed state of Bitcoin mining industry with firms squeezed between high electricity costs and muted Bitcoin price. One of Core Scientific's peers, Compute North, filed bankruptcy in September, owing as much as $500 million to at least 200 creditors. Bitcoin touched an all-time high of almost $70,000 in November of last year, and since then, the world's largest cryptocurrency has slumped, dropping to below $20,000 in June. Since then, it has stubbornly hung around $20,000 level, meaning miners have struggled to break even. All that being said, a majority of that is because, well, people tried to grow too fast and thought the gravy train was never going to end. And, you know, there was a certain point where I kind of felt that as well. You know, we saw some interesting things happening around last year, but looking back on it, hindsight, it was a complete cyclical move in tradition with the halving cycle of Bitcoin. There's nothing new here under the sun, and we can probably expect it all to take place in the same manner, of course, moving forward. I think that basically, not financial advice, you can hold steady to the halving cycle of Bitcoin, and we can, you know, plan on essentially some sort of recovery to somewhat profitable mining in a year, 6 months to a year from now, and then obviously another boom in 2025. The thing is that we are also experiencing some really interesting times as it comes from, you know, how do we get, you know, post lockdowns with everything from issues with, you know, supply chain to the economy and energy levels and prices and all of that. There's a lot going on in this world. And yes, I cover cryptocurrency, but I do plan to cover cryptocurrency as we evolve this channel from that perspective of, you know, actually looking at what's happening behind the scenes with everything else. And that means that we do have to pay attention to, I think, first and foremost, central bank digital currencies. In Kazakhstan, central bank is going to be utilizing apparently Binance or BNB chain for its CBDC. This is really interesting. Over the last couple months, the crypto industry has witnessed Binance making headlines alongside Kazakhstan. The country was seen welcoming the crypto exchange with open arms. More recently, the firm managed to acquire a license to operate in the region. In addition to this, the exchange's CEO, Changpeng Zhao, revealed the country would be testing the integration of their CBDCs on the BNB chain. In a recent Twitter thread, Binance's CEO CZ pointed out that their exchange had put forth the concept of BNB chain before the National Bank of Kazakhstan. The idea of integrating the digital Tang with the BNB chain surfaced. Elaborating on the same, CZ tweeted, quote, looking forward to NBK preparing CBDC use cases to see how they could be integrated into BNB chain to bridge the gap between traditional banking and the crypto ecosystem, end quote. It should be noted that the Kazakhstan government and the central bank have been working on rolling out their very own CBDC for quite some time. NKB had previously noted it would launch the digital Tang, I'm probably pronouncing this wrong, excuse me, by late 2022. CZ also pointed out that more recently, the NKB carried out a CBDC pilot in a controlled environment with real consumers and merchants. So, as mentioned earlier, Binance was seen laying a foundation to take over the Kazakhstan crypto market. While the exchange has already garnered licenses to operate in the region, Binance is expected to aid the nation in regulating the market. Following a previously signed memorandum of understanding, the firm intended to support the country to formulate regulations governing crypto. The firm recently signed another MOU with the Agency of the Republic of Kazakhstan for Financial Monitoring. Through this, the exchange is expected to aid the government in identifying and filtering out illegally obtained cryptocurrencies. Now, with the exchange extending support toward Kazakhstan's CBDC efforts, Binance is likely to be untouchable. Here's the thing that everybody needs to pay attention to with this. And I'm just going to say it, and we're probably going to get suppressed because I'm the only one that's going to actually bring this up and bring out basically the dangers of this happening. What is happening right now, as we speak, is a proxy war over Bitcoin hash rate and control. And that proxy war is being levied by Russia through Kazakhstan, okay? And this is the hash rate wars. Sure, we have everything else going on in Ukraine, all right? We have, that going on, proxy war being waged, like real war, proxy war being waged by the US through Ukraine, essentially. And then Russia, as we saw before, coming in to basically bolster up the Kazakhstan power grid to basically mine Bitcoin. And in this manner, what the Russian government and oligarchs and everybody are able to do is participate within the Bitcoin mining ecosystem without having it directly within the borders of Russia. This is a proxy hash war going on, okay? The proxy hash war, once again, is Russia into Kazakhstan. Why is that important with this particular argument with Binance Smart Chain and BNB? Well, as we know, the U.S. government, the SEC and the Fed determines basically proof of stake cryptocurrencies as essentially securities. And this is done in a manner to essentially regulate certain cryptocurrencies as they see fit. And they are a lot more likely to, in traditional manner, go ahead and apply sanctions to cryptocurrencies that are considered securities much quicker and faster than they are to cryptocurrencies that are considered commodities, i.e. like Bitcoin. So what you could end up seeing is essentially a response to this movement here in the near future of the SEC coming down hard on Binance. This is what I worry about when we look at these events take place. Once again, let's go through this once again, just so you guys understand. Russia is supplying funds to Kazakhstan to bolster the power grid to mine Bitcoin. BNB is now working with a CBDC in Kazakhstan. The US is already waging a proxy war through Ukraine against Russia. The US has already put sanctions in place to Russia. The SEC takes control of cryptocurrencies, essentially, that are proof of stake via basically, essentially calling them a security and not a commodity. BNB is a proof of stake coin chain. Binance partners with Kazakhstan. The US doesn't like it, sanctions out Binance and transactions on Binance. Will this happen for sure? No, probably not. I don't know, but it's something to pay attention to, and it's very important, okay? I want you guys to be very aware of all that because it's getting absolutely wild in here. But that's okay because Elon Musk is going to save the world, okay? Been saying it for a while. Dogecoin makes sense as a transactional coin. I've been saying it. I really wish I would have listened to myself a while ago and sold all my GPUs and just bought L7s. But instead, here we sit making no money while Elon pumps Dogecoin by purchasing Twitter. Why? I don't know. I don't know. But it's happening, okay? Twitter to be delisted from the New York Stock Exchange following Musk's deal. Elon Musk's Twitter deal is finally coming through. The Tesla CEO has been trying long and hard to get the social media giant Twitter under his wing. After multiple fallouts, Musk is inching closer to acquiring the platform. Amidst this, it was brought to light that Twitter was being delisted from the New York Stock Exchange. As per a recent delisting notice from NYSE, Twitter would be ousted from the platform on October 28th, 2022. That's tomorrow. As seen in the below image, NYSE posted that Twitter would be suspended on Friday. It should be noted that Musk is expected to close the $44 billion acquisition deal before this weekend. Several banks have even initiated the funding of the $13 billion of the $44 billion required for the deal to come through. At press time, Twitter recorded a 1.08% surge. There have been a plethora of rumors regarding Musk's Twitter takeover. One among them was that Musk would be ousting 75% of the employees at the social media firm. However, Musk affirmed that he would do no such thing. Yesterday, Musk made news following his visit to Twitter headquarters. What surprised the community even more was his entry with a sink along with his location as Twitter headquarters. And he said, let that sink in. Pretty funny. I think most of you all have seen that. And then in response to that, Dogecoin price triples in 7 days. And if you guys haven't seen this, like Dogecoin is basically topping the charts and basically just going as crazy as you could expect it to do. Or this is Doge chain, excuse me. Let me pull up the right one. That's another one we got to pay attention to. But Dogecoin has been looking absolutely insane. Look at that. Look at that pump. And the volume is going way up, which is cool. So if we look at cryptocurrencies, I think it's in the top 10 now, back in the top 10, with the biggest 7-day increase at like what, 29%? Not, I guess there's Clayton and Toncoin, which we talked about Toncoin on Twitch yesterday. But other than that, Dogecoin, as far as proof of work coins, topping the charts in the top 100. Definitely something to pay attention to. We'll be looking at more of these here in just a second. So, you know, Elon does something, Dogecoin goes up. If you know when Elon's going to do something, buy Dogecoin. After he does it, sell Dogecoin. Not financial advice. Also, I don't know how you would get that insider information, but that seems to be the case in general. I am going to be turning back on some more Dogecoin miners. So there you go. Now, apparently there's something called Doge Chain, but we're going to skip that and save that for the show on Twitch after this. And we are going to hop into what time are we at? Yeah, we got time, right? All right. So this got sent to me. This is Zero Hedge on Twitter. Well, obviously, like if you're not familiar with Zero Hedge, just he posts a lot. And then he has a blog, and then he posts under Tyler Durden. If you're not familiar with that, that's from Fight Club. And I think Fight Club has a lot of important parallels to crypto. If you guys haven't watched Fight Club, I highly recommend it. I think there's a lot that you could garner from it. especially in today's age, right? To a certain extent, things like the destruction of masculinity, etc. It's an important one to take a look at. But wealthy Chinese activate financial escape plans, terrified of Xi's coming reign of terror, and why this is good news for Bitcoin. This is, unpacking this is rough. So we're going to try to unpack it. I read this, and I'm still, let's be clear. This is opinion, right? This isn't necessarily, we got to be careful with this one. Okay. So grain of salt, take it with it. Let's get into it. Back in September of 2015, more than 7 years ago, when Bitcoin was trading around $225, and just after China had stunned markets with its relatively modest yuan devaluation, we made a modest prediction. In summary, while China is doing everything in its power to not give the impression that it is panicking, the truth is that it is one viral capital outflow report away from an outright scramble to enforce the most draconian capital controls in its history, which, as every Cypriot and Greek knows by now, is a self-defeating exercise and assures an ever-accelerating decline in the currency, which authorities are trying to both keep stable while also devaluing at a pace of their choosing. Said pace never quite works out. Now, I think in general, this is not just happening in China. I think this is global. I think globally, multiple currencies, including the US dollar, are doing the exact same thing. Personally, but that's personal opinion. So what happens then? Well, China's propensity for gold is well known. We would not be surprised to see a surge of gold imports into China, only instead of going to the traditional commodity financing deals we have written extensively about before, where gold is merely a commodity used to fund domestic carry trades, it ends up in domestic households. However, while gold has historically been the best store of value in history and has outlasted every currency known to man, it is problematic when it comes to transferring funds in and out of a nation. It tends to show up quite distinctly on X-rays, which is why we would not be surprised to see another push higher in the value of Bitcoin. It was earlier this summer when the digital currency, which can bypass capital controls and national borders with the click of a button, surged on Grexit, concerns and fears of drachma return would crush the savings of an entire nation. Since then, Bitcoin has dropped. However, if a few 100 million Chinese decide that the time has come to use Bitcoin as the capital controls bypassing currency of choice, and decide to invest even a tiny fraction of the 22 trillion in Chinese deposits then in Bitcoin, whose total market cap at last check was just over 3 billion, sit back and watch as we witness the second coming of Bitcoin bubble, one which could make the previous all-time highs in the digital currency seem like a low point as Bitcoin soars past $500, past $1,000, and rises as high as $10,000 or more. Well, we got that direction spot on, but not even we could anticipate just how much or more Bitcoin would soar to some 6 years later when it nearly topped $70,000. Of course, far be it for us to claim that Chinese capital outflows were the only driver behind the exponential rise in Bitcoin, but they certainly were one of the earliest catalysts behind what would be a truly fantastic generational wealth-creating melt-up, and certainly explains Beijing's relentless crusade to crush Bitcoin and crypto in general, and to launch its own laughable attempt at a CBDC, which not unexpectedly has become a complete disaster. Why do we bring this up? For 3 reasons. First, as we noted yesterday, China is aggressively engaged in stealth devaluation. And while it pretends to be trying to contain the yuan from collapsing, the plunge in the currency has been historic. Even CFR analyst Brad Setzer admitted today that until China proves otherwise, it is effectively engaged in a controlled depreciation. But so far, nobody in the US pretends to notice. Second, back in 2015, total Chinese bank deposits were $22 trillion. Fast forward to today when they are 2.5 times larger at $55 trillion, or more than double their US equivalent. That's a lot of domestic deposits that will need to be quietly ferried offshore once China admits it is aggressively pursuing yuan devaluation, which it is doing right now. Third, back in September 2015, millions of Chinese rushed to park their savings offshore, terrified that Beijing's ongoing devaluation wave would wipe out the value of their financial assets. Well, it's time for another offshore funding scramble because, as the FT writes, today, thousands of wealthy people across China are headed for their exits as President Xi Jinping secures a third term, making him and the ruling Chinese Communist Party even stronger than before. Recall that just hours after Xi not only was declared dictator for life, but unceremoniously and in full view of the entire world, had his centrist, globalist, and pro-reform predecessor, Hu Jintao, escorted out of the building, guaranteeing that the rest of his rule will be a radical departure from heretofore accepted norms, and calling for the great rejuvenation of the Chinese nation. It's a large shift in a new direction. If you guys watch Tim Pool, you might get a kick out of that one. Oh man. Yeah. So based on revitalizing the CCP's role as the economic, social, and cultural leader, Chinese stocks cratered to multi-decade lows, and the yuan plunged to a record low as the growing realization of the horror that is coming swept across the land. As a result, Chinese wealthiest were met with market turmoil on Monday when Chinese stocks crashed the most since 2008. And that's a big deal, guys. We've been talking about this. They're going through a housing financial crisis, primarily because there's not enough people and there's too much housing, which, is a completely crazy problem that is opposed to what we are being told by a majority of people, which is that we need to reduce the population. We're seeing, in both Japan and China, who have, basically been pretty hardcore on population control in different forms, obviously, one more crazy than the other. They are now suffering from the reduction of that population, which is very interesting. And that is impacting the housing markets in both areas. And I think it's going to get bad in the U.S. as well, because whether you like to admit it or not, the U.S. is participating in population control too. It is this shift in society where you are encouraged to not have kids, have a 2-household income, meaning basically you have, even if you are married or have a significant other, you'll never see each other because you'll always be working, right? Well, it's a slave state, a modern slave state, in my humble opinion, right? And you are highly discouraged to have kids because you can barely support the household as this gets worse with 2 incomes and just 2 people. You add a third person to that, you can't afford it. Then in addition to that, we are pushing for abortion all the way through birth by past a month. Now, whatever your opinion on abortion, right? It doesn't really matter because it's not about the right to have an abortion. It is the narrative surrounding abortion, which abortion is now considered good. In my humble opinion, abortion shouldn't be considered good, but the rights of another human being is none of my say, right? You have the right to do whatever you want. I just don't think the promotion of it is necessarily a good thing. And I think that is what we'll end up seeing is as we get, obviously, less population, I think we'll run into more issues with housing and so on, especially as we boom up and then collapse down like we're seeing in Japan, okay? welcome to the new son of a tech. In any case, as hundreds of millions of Chinese savers now scramble to move as much of their assets as far away offshore from the lunatic fringe in Beijing as possible, we have been flooded with the reports that wealthy families across Hong Kong and China are at a tipping point about triggering so-called financial fire escape plans to avoid the wrath of Z and the CCP, according to David L'Esperance, a Europe-based lawyer who works with elite Chinese businessmen who spoke with Financial Times. Quote, now that the chairman is firmly in place, I have already received 3 proceed instructions from various ultra-high net worth Chinese business families to execute their fire escape plans, he said. Ahead of the run-up to the 20th Party Congress, there was much concern that if Z cemented his third term, there would be no pivot to his controversial policies, including the COVID zero strategy and increased regulatory measures on companies, which have devastated parts of the economy. The actual outcome, in which Z crowned himself undisputed ruler and surrounded himself with fawning sycophants, while threatening a full-blown putsch of upper class, was far worse. Ki Meng Lo, a senior partner at Denton's Rhodic Bank in Singapore, which in the past 2 decades has emerged as the world's Swiss bank account, or the only place in the world where accounts remain truly anonymous, said that some Chinese elites have been inquiring about setting up family offices, even before last weekend, as a way to protect wealth from the CCP. The clients I work with saw Z's third term as a foregone conclusion much earlier than this week, Lowe said, adding many of these families who generally shield wealth in Hong Kong found it less attractive since Beijing now has authority over the territory. And this was another problem, and it's a big problem I have with Activision Blizzard, for example. When they basically banned, because of money, banned essentially somebody from saying free Hong Kong. And it seems like such a minuscule thing at the time, right? But look at the ramifications. Look what happens when you ignore basically the outcry of the people. This is the problem that I've had across everything when we talk about Russia, Ukraine, whatever it may be. We need to listen to the people. They're not that much dissimilar from you and I. Sure, some of them, like they different dialects, etc., but they, for the most part, probably have the same base goals, which is a decent life, taking care of their family, right? That's more than likely what it is. So, we got to start paying attention a little bit better to these outcries. And we can't punish individuals for the actions of their government. And that's really what it comes down to. And I think as an individual, we can do that. We have to stop punishing individuals for the actions of their government. We need to enable individuals to fight back against their government, especially when it's in a state of tyranny like it was in China. And we didn't do that. A US-based company, Blizzard Activision, straight up banned somebody that was crying out for help, and now this is where we end up. And sure, it was a lot of money for Blizzard back then, but Blizzard will lose a ton of money in the Chinese market as it collapses because of their own actions. It's crazy how that karma for that one little action will turn around and just completely decimate the economy. It's wild, guys. Sure enough, new data from Citi Private Bank shows the number of family offices in Singapore soared 5x between 2017 and 2019, and nearly doubled from 400 at the end of 2020 to more than 700 a year later as wealthy Chinese rushed to park their wealth offshore. Ryan Lin, director of Bayfront Law, also located in Singapore, said he was contracted by 5 wealthy Chinese families last week to establish a Singapore family office, and of those, 3 are quickly moving forward. Lin has helped establish 30 ultra-wealthy family offices in Singapore in the past year, as many of these families hope not just to relocate their money, but also their family. He also admitted that many of his clients had spent years preparing to exit China, legally moving money to safe offshore places that CCP cannot touch. Some of these families are even applying for citizenship abroad. Z is expected to unleash a broad range of wealth taxes under the populist campaign Common Prosperity that has spooked the wealthy. But hiding wealth could be the least of the worries, considering there have been numerous accounts of some billionaires forced into hiding, such as Alibaba's Jack Ma. Ongoing chaotic lockdowns under the COVID-0 policy, and Common Prosperity as Z secured a third-term push high net worth residents to the exits. The obvious question then is how long until China battens down the hatches and makes money transfers to Singapore impossible. The family motto has always been, keep a fast junk in the harbor with gold bars and a second set of papers. The modern equivalent would be a private jet, a couple of passports, and foreign bank accounts, Lesperance said. That is the world we are in. It is tough stuff. Of course, to fund said foreign bank accounts, one needs either gold bars to flee China's infamous financial firewall or their modern equivalent, Bitcoin. And while gold shows up on X-ray, crypto does not, whether it is sent by transfers across the blockchain or through unobservable flash drives. Indeed, one has to wonder if capital outflows from China are already starting to push Bitcoin higher, as fears of another round of draconian capital controls by Beijing spark outbound money flight. And if capital flight from China back in 2015 that helped propel Bitcoin nearly 100x from $250 to $20,000 during the first Asian-driven Bitcoin bubble of 2017-2018, one also has to wonder how high another full-blown Chinese capital flight will push the digital gold this time. And here's what's wild. It would be outside the halving cycle, potentially. However, we're kind of in a weird position. I still think 2023 is going to be extremely bad. Not financial advice. I just think it's going to be really rough and go sideways for a lot longer than people expect it to. But the good news is as long as inflation is going up and other things are happening, well, and as soon as we hit deflationary, which is what we want to see, right? We're starting to see deflationary in China. Once we start seeing it in the US dollar, things get really interesting. And I would highly recommend you watch my video with, I forgot his name now, a Bitcoin miner. Let me get the video up here for you guys that talked about this. This would be the very first time that we would see essentially Bitcoin go react to deflationary. And I highly recommend listening to my show with Orion and Taurus and Alex Hayes. Very intelligent guy, knows a lot more than me on this subject and was able to educate me a little bit. Okay. So I think that's good. Here's the deal. I think that in general, we have potential here for a breakout from Bitcoin outside of the traditional halving cycle, if things really are this bad. However, if I was in the position of an elite and I wanted to basically have more privacy, I would probably pick a different solution, maybe something like Monero, right? And that's just how I see it. Like if it was me, Bitcoin's got that public ledger. I don't want to be tracked down and then, punished outside of, or however that may go. That's what I would be worried about. But they do make, Zero Hedge here makes some good points, and things get really interesting when we take into consideration that today we had the largest outflow of Bitcoin from Binance ever. Actually, the largest outflow of Bitcoin from exchanges ever in the past 24 hours. As you can see here over on CoinGlass and our balances, here's the Bitcoin balance on exchanges. And Binance, keeping in mind, of course, their recent partnership for BNB and Kazakhstan, just saw today a 58,092 Bitcoin outflow from its exchange. Which is simply insane. It's actually in a complete opposite move of what we were expecting going into November. This is good news because what we have been going through lately is the rubber band. For those that are not familiar with the rubber band in trading terms, it means that essentially we've been going sideways so long since June, right? Stretching the rubber band further and further. And at one point it will pop and either go up or down drastically. The next huge, of course, increase or decrease of cryptocurrency based on charts and trading analysis, not my trading analysis, the trading analysis I get from other people, and definitely not advice here, is that essentially in November and December, we would see that rubber band pop and we would either skyrocket up or completely dive down. Now, initially what we had saw was an inflow of Bitcoin into exchanges. And there was some expectations of this actually going down. But now with this huge outflow, the single largest 24-hour outflow of Bitcoin from Binance ever, this does mean essentially that we could see a skyrocket up. And a skyrocket up in the year 2022, mid-bear cycle, basically, because we're expecting like a bear cycle to go till the end of 2024, would be completely unexpected. But due to the greater macroeconomic effects, I suppose it could be possible. I'd like to hear your thoughts and opinions in the comment section as well as the live chat. So, for all you miners out there, you've waited. We usually start the show off with miner releases. Now, we're no longer going to be starting the show off with minor releases. Why are we not going to start the show off with minor releases? Well, I do have to start re-evaluating the show, the format that we go in, to appeal to a larger audience. A larger audience starting off with a niche thing like minor releases is going to turn a certain amount of people off. So while we want to maintain the news information from the minor releases to garner extra releases, you know, obviously if you aren't a miner, it's still very important because you'll get heads up about new coins, stuff like that. But also still make sure that we carry on and appeal to a larger audience. We will be moving the minor releases to the end of the show, along with the mining profitability charts, etc. Okay. There are a couple other things that we'll probably be doing as well as far as format changes. Outro, for example, I do plan on talking to you guys over on sonofatech.locals.com and having an outro that is running credits of the people supporting the show, because right now the only way I survive and we continue the show is by direct support from y'all. It's PBS up in this bitch. What can I say? But this is what we're going to be doing as far as that's concerned. We are going to be covering the big topics at the beginning of the show. We're going to be covering the important stuff that appeals to everybody. And then we're going to be getting in further and further niche as we go throughout the day, right? Further and further niche as we go throughout the day. It's going to be easing you guys back into cryptocurrency, easing you back into the technicals, easing myself back into the technicals, and hopefully getting it into a position where you are as fully educated as possible and up to date as possible. And that's my goal. Before we get into it though, let's run the ad one more time and then we'll hop into the minor releases for the day. And today's going to go a little bit over just because we had a lot to catch up on.
Established in 2017, Octominer is an international mining hardware company. They manufacture and engineer the best mining equipment in the industry and supply rigs to some of the largest mining farms around the world. Their GPU mining rigs also integrate with the top crypto operating systems like HiveOS, MinerStat, and Simple Mining. All parts come with an international 1-year warranty. Exciting news! They will be adding ASIC miners for sale to their website soon and launching a new product built specifically for ASIC home miners. Please visit octominer.com or email support@octominer.com for questions.
Sorry about that, guys. I accidentally locked the top deadbolt so the wife couldn't get in. All right, let's hop into it. Team Red Miner version 10.5.1 released 8 days ago. Bug fixes replacing 0.10.5. All GPU miners running single algo Caspa using 10.5 should upgrade. GPU Caspa single algo fixed crucial bugs, sometimes delaying shares, resulting in pool rejects. Caspa single algo fixed solo mining against the Caspa Stratum bridge for all or bridge or other setups with no extra nonce set. So obviously the solo mining thing on Team Red Miner has been pretty bad for a while. It's good to see that they finally fixed that going through the Caspa Stratum bridge. Excited to see that. At the same time, you know, AMD's not that great on Caspa right now, even with the 6000 series. 6900 XT's okay, but it's still not like, it's nowhere near the performance you're getting on the NVIDIA side. So kind of like not too much of a fun release as far as like, I don't think it'll matter that much or impact any of your farms that much. That being said, we do also have a new release from XM Rig, and it is version 6.18.1, released 4 days ago. Ghost Rider algorithm release notes. So there's some new release notes here. We can take a look at, I think. So, yeah, so that's just the new release notes. Okay, we've already read those release notes. VAES optimizations not supported by the 6.18.1. So please run the older version instead. Random X benchmarks, blah, blah, blah. Stay tuned for updates, configuration wizard. Nothing, they're not really talking about any changes here, best I can tell, until we get down to here. So they fixed Protect RX Flush CPU cache only for macOS and iOS. Don't reset when pool sends the same job blob. For Random X, they optimized CF round elimination. The Random X added Blake 2 AVX version. Fixed the GCC 12 warnings, recognize ARM 7VE as valid ARM v7 target. Random X added MSR mod for Zen 4 and added Zen 4 to Random X Boost .sh. So there you go. Nothing too big there in my humble opinion. We have a couple more minor releases though to get through today. We do have a G miner release 2 days ago, 3.11. Nothing great here. They just fixed miner restarts on Ergo plus Caspa. Okay. So if you're having issues with that on G miner for the dual mining with Ergo and Caspa, go ahead and check out the new release from G miner. Then finally, we have a new release from Team Black Miner released yesterday, of all things. Quite surprising in my humble opinion. And they added Ravencoin support in Linux. Or on Linux. So obviously that probably needed to be done a long time ago for them. Faster kapow on NVIDIA cards. So it may be worth checking out. And they fixed a rare crash on ETH plus ZIL dual mining. So fixed another crash if you're having issues there. And they added missing libraries to the Windows builds. Lots of just random little fixes here and there. Nothing too crazy or out of the norm. So there you go. Now, let's get into the hero miners. I'll show you guys what I'm mining right now. It's not worth it. Okay. If you want to check out what I'm spec mining, go become a member on sonofatech.locals.com. I'm not spec mining this. We are just mining pink. We're mining pink on hero miners with our test rigs, LHR01 and RX 6000 series rig. And it doesn't make like anything. Like we've made 2.24 pink in the past couple days, and like pink chain is worth what is it? Oh, it's not even popping up. It's worth basically nothing. I mean, it's like 0.2 of a penny last I checked. So I don't see where this ends up being worth it unless something changes or I'm missing something, but it's worth, taking a look at new coins as we can. But we were mining it just to see what was going on. And, we're going to run into a lot of new projects, etc. And we'll just have to continue to move forward. But let's take a look at what to mine for mining profitability or lack thereof for the day. And if we take a look at that with corrected hash rates on the 3090, at the 10 cents a kilowatt hour, we lose the least amount of money, I suppose, mining Bitcoin Z of all things at losing 17 cents a day. Equilibria, you lose 21 cents a day. Rio, you lose 22 cents a day. And this just all continues down, right? Flux, you lose 23 cents a day. We're getting used to this. This is the position we're in. Ergo, losing 31 cents a day. You get down to ETC with all the ASICs and it looks real bad. You're losing like 44 cents a day. The only real options, like in my humble opinion right now for GPU miners, at least like obviously if you have free power, that's going to help you out. Your break-even points are pretty low, I believe, right? We could calculate that out. I don't even think. Yeah, so if you're at like 5 cents a kilowatt hour, you can be marginally profitable, right? But still, most of us are seeing rising electricity costs. I'm closer to 15 cents a kilowatt hour now. So what I've been focusing on is mining stuff that's not released yet. And then kind of moving over to other stuff that's not released yet. And the reason for that is, frankly, look, complete transparency. Outside of Caspa, there hasn't been a coin that I've mined before it launched on an exchange that I've held. The rest of them I've mined, and then as soon as it hits an exchange, I sell. I don't have much trust in many of these projects. Most of these projects are just forks. Caspa is a little bit different because it was ground up. I'm going to support ground up projects a lot better. I'm going to hold those. The non-ground up projects, you know, the projects that are forking Ethereum, that are forking Ravencoin, that are forking whatever, just name it. Doesn't really matter. If it's a fork, I mine it before it launches. I'll talk about it on locals. And then as soon as it hits onto an exchange, I'm going to be honest, I sell it. Okay. I'm not going to hide any of that from you all. That's just how I'm working it. And I think that that's the best plan. You know, things like Radiant, all that stuff, right? Evermore. Some of these I didn't get in on early enough, but these are examples, right? Stuff like that. Now, on my watch list, we have some stuff to talk about. So I have all my proof of work coins here, specifically GPU mineable. I guess technically we have Ethereum Classic here, which is ASIC. Past 7 days, Caspa has gone up 21%. However, that's not really that indicative of like real good price movement because we're still under 0.2 of a penny. Technically, this was like, I think it's high. Was quite some time ago, but it's still been kind of going sideways just with that recent uptick. ETH proof of work up 15% here recently, which is pretty crazy as well. And I think a lot of that has to do with, you know, here's the deal, guys. Some of the largest projects that have shown the most activity on Ethereum have been also launching on ETH proof of work or ETHW. I know early on, like Daniel Keller, for example, was against this primarily because, you know, he said it was a just in Sun project. As we kind of got further, it was very clear that Ethereum Fair, ETH was the just in Sun project. ETHW, ETH proof of work, is the Chandler Go fork. Now, Chandler Go has obviously had some bumpy times in the past too, but what are we seeing with ETHW? We're seeing adoption. And I think that I think putting blinders on and showing prejudice towards ETHW would put you in a poor position. I think you want to pay attention to it, okay? This is kind of what I'm coming around to. I think you want to pay attention to ETHW because I think at this time we are starting to see basically adoption on that network that is, you know, frankly, beyond a lot of what we've seen before. And it's already at like, you know, I think a fifth of the 24-hour volume of Ethereum Classic. Making it like, if we went by volume, it's second place in volume. Obviously, Ethereum Classic being first place, which is the big deal. But that's significant, you know. A lot of people talk about this volume setup, right? And kind of like why Ravencoin had a chance compared to like Ethereum Classic. ETHW is a lot closer to Ethereum Classic than Ravencoin is, okay? So if your argument to me in the past, because I've heard it, was, well, Ravencoin's the next, largest volume compared to ETC. It's like, okay, well, now there's ETHW. So, obviously, if you're, if that was your argument for Ravencoin, take a step back and look at the big picture, okay? This adoption is interesting, to say the least. Do I recommend purchasing it or anything like that? No, obviously we don't do financial advice anyways. Am I purchasing it? No. But I just think you would do yourself a disservice if you aren't paying attention to ETHW at this time. I just do. Now, let's look at, of course, the Bitcoin networks. Let's look at hash rate on the networks. We're up 7% over the past 7 days on Bitcoin, with the hash rate sitting around 260 exahash. Surprisingly, not much of a difference from when we last did our show 2 weeks ago. Ethereum Classic now is up 10% over the past 7 days and is at 156 terahash a second. It's down maybe like 4 to 6 terahash a second since we checked last. Ethereum Proof of Work is up 15% over the past 7 days and is at 36 terahash a second. Not really much of a change. Ethereum Fair is down 0.54%, Justin Sun's Ethereum fork, by the way, and is at 5.1 terahash a second. Zilliqa, which a lot of people are dual mining, is up 1.5%. Excuse me, my cough is kind of coming back. And yeah, there you go. Let's take a look at Ravencoin, which is down 2% over the past 7 days and at 15.6 terahash a second. If we take a look at Flux, we are up 1.25% over the past 7 days and it's 7.62 mega solutions a second. And then Ergo. Let's take a look at one of our favorites, Ergo. Ergo, down 3.6% over the past 7 days and has dropped hash rate since the last show by about 4 to 6 terahash. It's at 46.5 terahash a second now. Taking a look at some of our other little favorites, we'll take a look at Caspa, up 19% over the past 7 days like we made note of, and up to 110 terahash a second with a huge spike happening over the past week. We were at like 95 terahash a second and then spiked right up. Unfortunately, that means that obviously it's going to go down in profitability. That's primarily due to, I think, a lot of the dual mining options that are at Woolly Pool. You can basically dual mine Caspa with anything your heart desires. Ethereum Classic, Ergo, Ethereum Fair, ETHW. And I think that that is making Caspa kind of one of those big, like, second mine, like, dual mineable coins. Alephium is another one that's the same. It's up 21% over the past 7 days. It's at 32.5 terahash a second, but no real recent spike. It's kind of just been pretty steady. Now, this one's been one that has been surprisingly profitable still on pretty low margins, yes, but surprisingly profitable. And here recently, we had a pretty significant difficulty drop. So, you stick around till the end of the show, you get some tips and tricks. There you go. That's what we discovered today. Let's take a look at ASIC miner profitability. We have the Antminer L7 coming in first place, 1758 a day on NiceHash script. And of course, that's probably going to be dual mining, merge mining, something like Dogecoin, Litecoin. Obviously up today with the big pump in Dogecoin. It's going to be relevant. The D7 in second place at 511 a day on Dash. You got the iPolo V1 at 715 a day on ETP. You have the KD6 at 595 a day on KDA, coming up a little bit compared to what it used to be. And the S19 Pro at $1.51 a day, $1.03 a day on Digibyte. If you were to mine Bitcoin, it's probably at a loss. It is still in profit on Bitcoin, it looks like. Barely. but it is in profit at 10 cents a kilowatt hour on Bitcoin, which it wasn't. So that's good news. We have some profitable Bitcoin mining going on, albeit kind of low. So that is going to wrap up the show over here today. We are going to be moving over to twitch.tv/blindrod. I hope you guys enjoyed the show. Thanks everybody for watching. We will be doing questions and answers over on Twitch because we ran over today over here and I want to keep our schedules consistent. So the schedule will go 9:45 a.m. Central to about 11 a.m. Central Time, preferably 10:45 a.m. Central Time over here on YouTube. And then we will end up moving on over to twitch.tv/blindrod. We will then be having a clip of essentially the most important thing that we've talked about today on the show at 6 p.m. Central Time. Metal Miner is going to be taking care of that for us over here. And then over on the Blind Run YouTube channel, we'll be having the most important clip from Twitch later in the day. So that will also be happening the next day. Lots of clipping to be done. If you would like to start clipping and helping out with the channel, the entire thing that I need to do is get the community working behind me to help move this content to every platform, every place possible. If you want to help with Twitch clipping, stuff like that, there'll be other perks that come with it. Go ahead and email me at inquiry@sonofatech.com and I'll get to you over there. So without further ado, what we're going to be doing is moving over to twitch.tv/blindrod. And we will continue the show there soon. Today we will be over there talking a little bit more candidly and answering some questions and getting that out to you guys. So make sure you are moving over there. And I will get that actually out over here too. Oh, over to here on the Rumble as well. And then once again, just to clarify what's going to be going on, Monday through Friday, 9:45 a.m. Central Time to 10:45 a.m. Central Time here on YouTube. Actually, sorry, Tuesday through Friday. It'll be dual streamed over on Rumble as well. And then Monday will be exclusive on Rumble. Mondays after at 11 a.m. we will be doing an exclusive live stream for Locals members only on Locals. And then Tuesday through Friday we will be doing a stream over on twitch.tv/blindrod. Now, some easy ways for you to support me. If you don't have the money to directly support me, I completely understand. All I need is for you to share the videos out, hit the like, be the notification. That would help me out a lot. Secondary to that, if you do so happen to have a Twitch or an Amazon Prime account, you may not be aware, over on Twitch, you can subscribe to the Twitch channel for free with an Amazon Prime account. That's free for you. I get $2.50 for the month, and that is a way you could help me out without having to spend any extra money than you already are for your Prime membership. So that happens every month. It renews, so make sure you come back in and do that. That would be extremely helpful. At this time, we are going to move over streams. I hope to see you guys over on Twitch, and we will be over there streaming and answering questions. And I will see you guys, as far as the YouTube goes, tomorrow at 9:45 a.m. Central Time. And in the evening, we will be doing the Call of Duty Modern Warfare 2 stream as well over on Twitch. We'll talk about that more. I hope you enjoyed the show. I'm very happy to provide this service to you guys and keep you up to date with cryptocurrency. This is truly what I love to do. I hope that I can continue to do it, and I hope that it brightens your day and helps educate you as well, and all of that. So there you go. We're going to move over to Twitch. Thanks again, and I will see you next Tuesday.